Hey everyone, this is your host PK and welcome back to Safe Simple Sound podcast, your trusted source for navigating the world of financial planning. Today's episode is inspired by my article titled Understanding Financial Professional Roles, a CHFC's perspective. It offers a fascinating look at different types of financial professionals you might encounter, specifically focusing on the distinct roles of a life insurance professional and a chartered financial consultant. Since I am both CHFC and life insurance agent, I feel that I am qualified to compare the two worlds. At Safe Simple Sound, we believe in empowering you to seize financial control. And a big part of that is understanding who you are working with and how they can help you achieve your financial goals. There are two key takeaways in that article. First, the importance of integrating your insurance needs within a comprehensive financial plan. And second, the value a CHFC brings to the table with their holistic perspective. This isn't just about buying life insurance policy. It's about seeing how that policy fits into your broader strategy for wealth management, retirement planning, and even estate planning. So, to unpack these ideas, we have structured today's episode into 4 informative sections. First, we will explore understanding the CHFC difference, delving into what this designation means and how it benefits you as a client seeking financial security. We will address the limitations of working with a professional who only specializes in one area, like just life insurance. Then, we will move on to when to engage a life insurance professional versus a CHFC, helping you determine which type of advisor best suits your current needs, whether you are focused on immediate protection or long-term financial planning. Next, we will dive into secured approach to financial planning, a framework we developed to help you create a safe, simple, and sound plan. We will discuss how integrating insurance decisions into this framework can help you embrace mastery of cash flow and create a financial safety net. And finally, we will wrap up with choosing the right financial professional, providing you with essential questions to ask and red flags to watch for. We will explore how to ensure you are working with someone who truly understands your financial goals and puts your interests first. So, get ready for an insightful discussion on how to find the right financial advisor to help you build a secure financial future. Let's start with deep dive into designation, the Chartered Financial Consultant or CHFC. This is a topic near and dear to my heart as I hold this designation myself and I have seen firsthand the value it brings to clients. So, what makes CHFC different? First and foremost, the CHFC mark signifies a commitment to advanced financial planning knowledge. It's more than just understanding insurance, it's about integrating insurance within a broader financial strategy. Think of it like this: a regular insurance agent might help you build a solid foundation for your house, essential for sure. But a CHFC helps you design the entire blueprint, including the plumbing, electrical, and everything else that makes a house a home. They are equipped to handle investments, retirement planning, estate planning, taxes, the whole 9 yards. This brings me to my second point. CHFCs are trained to see the big picture. They take a holistic approach, recognizing that all your financial decisions are interconnected. For instance, choosing the right life insurance policy isn't just about death benefit. It also impacts your taxes, your retirement savings, and potentially even your estate plan. A CHFC can help you navigate these complexities and ensure all pieces of your financial puzzle fit together seamlessly. Let's say you're debating between maxing out your 401k or purchasing additional life insurance. A specialist might only focus on benefits of their specific product. A CHFC, however, will analyze your entire financial situation, your current savings, your future goals, your risk tolerance, to recommend the best course of action for you. This integrated approach can be incredibly valuable in the long run. Thirdly, the CHFC designation requires rigorous education and adherence to high ethical standards. This translates to a higher level of client care and fiduciary responsibility. Think of it like choosing a surgeon. You wouldn't just want anyone operating on you, right? You would want someone with extensive training, experience, and a proven track record. Similarly, a CHFC brings that extra level of expertise and commitment to your financial well-being. Now I want you to think about your own financial situation. Are you working with a financial professional who only specializes in one area? Are you feeling overwhelmed by the complexities of managing your finances? How could a more integrated approach benefit you and your family in the long run? So, as we wrap up this segment, remember these key takeaways. The CHFC designation goes beyond basic insurance, offering a holistic approach to financial planning. CHFCs integrate your insurance needs with your broader financial goals and rigorous standards to ensure a higher level of client care. My call to action for you today is this: consider the value of holistic financial planning and whether a CHFC's expertise aligns with your needs. Now let's delve into a common question I get. When do I need a life insurance professional versus a CHFC? It's a great question because choosing the right professional can significantly impact your financial well-being. This isn't about one being better than the other. It's about finding the right fit for your specific needs. Think of it like choosing a doctor. You would see a general practitioner for a checkup, but a specialist for a specific medical issue. Similarly, different financial professionals bring different expertise to the table. First, let's talk about life insurance professionals. They are your go-to experts for all things insurance. They are incredibly knowledgeable about various policy types, riders, and benefits. They can help you compare quotes, navigate the application process, and find the best coverage for your budget. So, if your immediate priority is acquiring new policy or comparing existing ones, a life insurance professional is an excellent choice. For example, if you are a young family starting out and primarily need term insurance, a life insurance professional can guide you efficiently. Now, a CHFC takes a broader, more holistic view. We are trained to integrate insurance decisions with your other financial goals like retirement planning, investments, and estate management. Think of us as financial architects designing a blueprint where insurance plays a crucial but integrated role. So when does a CHFC become particularly valuable? Let me share some common scenarios you might face. You are deciding between saving for college or retirement. You are wondering how much to put into your 401k versus life insurance. You are trying to figure out if you can afford a bigger house. You are planning for future healthcare costs. In these everyday situations, a CHFC can help you see how life insurance fits into your broader financial picture. We can help you balance protection with other important goals. CHFC expertise becomes even more crucial when you are facing situations like planning for business succession, setting up estate planning strategies, managing inherited wealth, coordinating employee benefits, planning for special needs dependents, structuring charitable giving. In these more complex situations, a CHFC can advise you on using life insurance within a trust for estate planning, balancing term and permanent insurance for different goals, coordinating insurance with your investment strategy, optimizing policies for tax efficiency, integrating insurance with retirement income planning. This comprehensive approach helps ensure your insurance decisions support your broader financial goals both now and in the future. So, to recap, a life insurance professional excels at product knowledge and policy comparisons, while a CHFC specializes in integrating insurance with your broader financial life. To help you decide which professional is right for you, ask yourself these questions. What are your current financial priorities? Are you focused on immediate protection or long-term planning? Do your financial decisions require specialized product knowledge or more integrated approach? To wrap up this segment, remember that choosing the right financial professional is a crucial step towards achieving your financial goals. Consider your individual circumstances, reflect on your priorities, and choose the expert who best aligns with your needs. Now, I want to dive into a powerful framework I use at my practice to help clients build a truly secure financial future: the secured approach. Think of your financial well-being as a house. You need a solid foundation, strong walls, and a roof to protect you from the elements, right? That's what the secured approach provides. It's a comprehensive framework that addresses both protection and growth, ensuring you are not just safe from financial storms, but also building towards a brighter future. So, what does secured stand for? Let's break it down. First, C is financial control. This is about understanding both protection and growth strategies. Just like a ship needs both a rudder and an engine, your financial plan needs strategies for managing risk and building wealth. Do you know where your money is going each month? Are you actively saving and investing? Seizing control means having a clear understanding of your finances and taking proactive steps towards your goals. Next, embrace mastery of cash flow. This principle focuses on balancing production costs with other financial needs. Imagine trying to build that house without a budget. You would quickly run into trouble, right? Similarly, you need to understand how insurance premiums fit into your overall spending plan. A ChFC can help you optimize your cash flow so you can protect your family and pursue your other financial goals. The third element is create a financial safety net. This is where insurance and risk management tools come into play. Think of insurance as a foundation of your financial house, protecting you from unexpected events like illness or job loss. It's about having those essential safeguards in place so you can weather any storm. Then, understand financial choices. This principle emphasizes making informed decisions about coverage and investments. It's like choosing the right materials for your house. You wouldn't build a house out of straw, would you? Similarly, you need to understand the pros and cons of different financial products to make choices that align with your goals. Next, reap benefits of compound growth. This is where the growth aspect of secured comes in. Just like a small seed can grow into a mighty tree, consistent savings and investing can lead to significant wealth over time. A ChFC can help you harness the power of compounding to build a strong financial future. The sixth element is embrace financial flexibility. Life is full of surprises and your financial plan should be adaptable. Think of it as building a house with adjustable rooms. You can reconfigure the space as your needs change. A ChFC can help you create a flexible plan that can evolve with you. Finally, develop wealth and legacy. This is about integrating insurance into broader estate planning. It's like ensuring your house is well maintained and eventually passed down to your loved ones. A ChFC can help you create a legacy that provides for your family for generations to come. It's about building a comprehensive financial plan that encompasses protection, growth, and flexibility. I encourage you to reflect on these principles and consider how they apply to your own financial situation. Which of these resonate the most with your current goals? How can a structured approach like this enhance your decision-making process? To help you take the next step, I urge you to explore the secured approach further and identify areas where it can improve your financial plan. We'll have more resources available on our website. So now that we have explored the secured approach to building a solid financial foundation, let's talk about how to find the right professional to guide you on that journey. Because even with the best roadmap, you still need a skilled navigator, right? We will now tackle the crucial topic of choosing the right financial professional. Finding a financial advisor is a bit like choosing a doctor. You wouldn't just pick a name out of a hat, would you? You would want someone qualified, experienced, and who understands your individual needs. Well, the same applies to your finances. It's a big decision, and it's more than just picking stocks or selling insurance. So what should you be looking for? First and foremost, inquire about their qualifications. Are they a certified financial planner, a chartered financial consultant or ChFC? What's their approach to financial planning? Do they specialize in a particular area or do they take a more holistic view? And crucially, how are they compensated? Fee-based? Commission-based? Understanding their compensation structure is key to understanding potential conflicts of interest. One important thing to note here is that there is no compensation model that is 100% free from conflict of interest. So, clear upfront discussion of fees is very important to minimize the conflict of interest. You also need to know what kind of ongoing support they provide. Are they available to answer your questions? Do they offer regular reviews? Finally, ask about their commitment to staying current in the field. The financial world is constantly changing. So you want an advisor who keeps up with the latest trends and regulations. Now let's talk about some red flags. Be wary of any professional who is reluctant to discuss their fees. Transparency is paramount. Also, be cautious of those who pressure you into making quick decisions, offer generic, one-size-fits-all solutions, or seem disinterested in your overall financial picture. Remember, your financial advisor should be working for you, not the other way around. They should take the time to understand your individual goals, your risk tolerance, and your long-term objectives. A good analogy here is buying a car. A good salesperson will take the time to understand your needs. Do you need a family car, a fuel-efficient commuter, a rugged off-road vehicle. They won't just try to push you into the most expensive model on the lot. Similarly, a good financial advisor will tailor their recommendations to your specific situation. Finding an advisor who emphasizes safe, simple, and sound approach is key. Think about it. Safe means protecting your assets and minimizing risk. Simple means making sure you understand the strategies and feel comfortable with them. And sound means making sure the advice is based on solid principles and best practices. It's about making smart, informed decisions that align with your values and your vision for the future. Think back to a time you made a major purchase, perhaps a house or a car. Did you rush into it? Or did you take time to research, ask questions, and weigh your options? Hopefully, the latter. Choosing a financial advisor deserves the same careful consideration. To recap, finding the right financial professional is crucial for your financial well-being. Be sure to inquire about their qualifications, approach, compensation, and ongoing support. Be wary of red flags like reluctance to discuss fees and high-pressure tactics. Prioritize transparency, clear communication, and a genuine understanding of your goals. Your call to action this week is to develop a list of essential questions to ask the potential financial professionals. Don't be shy. This is your financial future we are talking about. Write down everything you want to know, from their experience and qualifications to their investment philosophy and fee structure. And that wraps up our deep dive into understanding different roles financial professionals play, especially when it comes to integrating life insurance into your broader financial plan. I hope this episode has shed some light on ChFC difference and how a holistic approach to financial planning, encompassing wealth management, retirement planning, and even estate planning, can truly empower you to seize financial control. One of the most impactful takeaways for me, and hopefully for you too, is the importance of asking the right questions when choosing a financial advisor. Whether you are primarily focused on finding right life insurance policy or seeking comprehensive financial guidance, remember those red flags we discussed: reluctance to discuss fees, pressure to make quick decisions, and a lack of interest in your overall financial picture. Don't settle for anything less than transparency and a genuine understanding of your financial goals. Thank you so much for tuning into Safe Simple Sound. Your time and attention mean the world to me. Be sure to visit our show notes for links to valuable resources mentioned in this episode, including a checklist of questions to ask potential financial advisors. And while you are there, if you enjoyed this episode on navigating the world of financial professionals, please leave a review and share it with anyone who can benefit from this information. It helps others find the show and join our community dedicated to safe, simple, and sound financial choices. Until next time, remember to stay informed, stay empowered, and keep making sound financial choices. This is PK signing off.